Good evening, everybody. This is Ken Cavullo from the Mid-Michigan chapter of Better Investing, and this is the January 2025 Investing Roundtable. I'm joined by my good friends, Cy Lynch, Ann Manning, and Mark Robertson. Cy is from Atlanta, Ann is from Houston, and Mark is from just down the road in Rochester Hills, Michigan. We'll be talking to you this evening about some stocks, and we'll be reminding you that this is the first time in a long time that all the Knights, no matter where they were in the country, had the privilege of shoveling snow last week. So we're happy that they got that experience. We're happy they got to drive in it for a little bit of time and find out what the joys of driving in the snow can bring with it. And we'll move away from the weather now and move on to our disclaimer. Mark, if you could advance the slides just one for us. This is an educational demonstration, folks. Everything we say and do is for educational purposes only. We're not making any recommendations to buy, sell, or hold. We really do feel that you folks are smart enough to make your own decisions, and we urge you to do your own homework and make your own decisions. If we own any of the stocks we talk about, we'll try to let you know when we're talking about them. If you'd like to be added to our guest list, then you can ask for copies of these slides, and you can then hit the subscribe button after you go to the Better Investing website. Look at the chapters tab, find Mid-Michigan, and there's a subscribe button right there at the bottom of the Mid-Michigan page. You'll have to scroll down just a little bit, hit that subscribe button, and suddenly you'll be on our guest list, and we'll keep telling you when we're doing our different types of programs. If you want copies of tonight's slides, Mark R at manifestinvesting.com is the person to contact, and those are both our real emails, and we actually answer questions. We are volunteers for this particular program, so please give us a couple of hours to get to those questions, and sometimes we even take a vacation, and it might be a day or two before we get back to you. We're so glad to have you with us this evening. If you can click one more time for us, Mark. Here's our performance. It's been moving in the wrong direction for the last 3 or 4 months, and part of that has to do with the fact that the market's been a little bit overheated. I'm convinced of that. The last time we were at this place was in 2011. We're at a 3.9% relative return. And what that means, folks, is that over the almost 15 years of our existence, the market has returned about 12.7%. and the roundtable portfolio has returned about 16.6%. Subtract those two numbers, and that gives you the relative return for the roundtable portfolio. Our goal is to beat the market by 5 points. Excuse me. And in an average year, that means we'd like to make 15, 16, 17%, somewhere in that particular range. We're comparing our performance against the Wilshire 5000. That's an index made up of 5,000 stocks on the New York Stock Exchange and the NASDAQ Stock Exchange, and maybe even one or two from other exchanges. But the Wilshire 5000 is a really broad index that we feel represents our style of investing better than almost any other index we can choose. We'd like to beat the market with our choices about 55% of the time. We have done research, read a lot of different books, and we think that 55% is a very noble goal to strive for. Right now, our outperformance accuracy is at 45.5%. We'd love to at least get it up to 50% maybe in the next year or so if we possibly could. Mark, I'm going to let you tell people whatever you want to tell them, and then let you take the next couple of slides.
Yeah, I would basically say we are in no mood to panic. There are a couple companies stocks that have held us back a little bit that we still have very high expectations for, and we'll take a look at the portfolio on a larger basis. By the way, that name Tillinghast refers to the longtime manager of the Fidelity low-priced stock fund, and we did a kind of a book review of his book from last year. Have very successful career, and he just talked about this notion of being right 55% of the time. Federer, that's how many points he won over his career, and he won like 85% of his sets, but the individual points 55. All right, here's a look at the top 20 positions in the round table. We keep a tracking portfolio. Anytime we make a decision by one of the knights, a guest damsel, or the audience, we invest $1,000 into the idea. And the numbers up at the top in the legend just simply tell us how many repeat selections have been made. So for example, Microsoft is worth $110,000 in the portfolio. Looking up above, you see that Microsoft has been chosen 5 times. That's where it appears in the legend. So as you go down the list, you can see the multiple selections, and there are a few that are just one-time selections that actually make this list. But pretty good performance overall. We'd like to see the par a little bit higher. We'd like to see, that's the return forecast. We'd like to see the average sales growth forecast a little bit higher also, and maybe even a nudge more, a smidge of quality higher. But in general, pretty good looking portfolio.
And we did promise you folks that in the next couple of months, as we approach our 15th anniversary and then move past it, that we're going to take a real serious look at some of the slower growers in the portfolio. Even though this is the 20 largest holdings, you'll notice in the growth column, and that's sales growth, you'll notice quite a few of them that are in single digits, and that are maybe below the 7% that we like to kind of use as a barometer of acceptable kinds of companies to invest in, going as far down as 4.5% marked global medical there at a sales growth of 4.5%. A great company, Globus Medical, but growing very slowly right now, right along with EPAM Systems at 4.6. And we're going to take a good look at those and maybe deal with moving some of them out of the portfolio with the goal of raising the growth rate. And we know that as you raise the growth rate, you raise the potential average return, and that's what PAR stands for.
Yeah, and here's kind of a slide to back that up. We use this a lot during our bull sessions, but what you're looking at is a list of the top 25 top performing funds, whether they're traditional mutual funds or exchange traded funds. We use this as a source of ideas. We'll actually hunt in these portfolios for investing ideas. But you can see from the top to the bottom, you can see where the round table would fit in. And the thing that we like to point out is every one of these successful funds, with one small exception, has double-digit sales growth forecasts. And most of the time they're up in that 13 or 14% range. So we want to definitely pursue that, perhaps even a little bit above that. And move on, try to move up this list and return to our top 10 position at one point. But keep in mind that that is, basically position number 21 out of a list of 650 mutual funds and exchange traded funds.
And Mark, we can pat ourselves on the back just a little bit because we've been focusing on growing that sales number, and it's been moving, albeit very, very slowly, but it has been moving in the right direction.
Yep, and we just want to keep, no need to panic. That's what I mean by that. Just to steadily boost that number over time. So again, a frame of reference. This, to us, this column really points to, because these are some of the most successful funds on the planet, and they share that strong growth characteristic in their portfolios. Okay, so with that, unless you got anything else you'd like to add, Ken, I say we go ahead and talk about this stuff.
I think we're ready to start our stock presentations. And I want to introduce to you a damsel from Houston that has been with us a number of times in the past. She's proved herself to be quite a successful stock picker. So since I happen to own the stock she's going to present tonight, I'm hoping that she's absolutely correct in all of her prognostications. So I'm going to present to you Ann Manning from the Houston Better Investing chapter. Ann, it's yours. Take it away.
Thank you, Ken. Thank you, everyone, for coming tonight. I will tell you right off that I had a really hard time finding the stock to present. As everyone knows, the market valuations are so high that it's really hard to find something in a buy zone. There's a lot of good companies in the hold, but not much in the buy. And in my search, I kept coming up with YETI, and I can't tell you why, but I didn't want to do YETI. But it was just every search I did, it was on the search deal. So I ended up doing YETI. So that's what we're going to do tonight. Next slide. Two brothers started YETI in 2006, Roy and Ryan Cedars. They are big outdoorsmen and they love to fish, and they found that they couldn't find a cooler that would keep their fish cold while they're out there fishing in the Texas heat. So they developed the YETI, and their first thing was the cooler to keep their fish cold. Next slide, please. This is a evolution of the cooler equipment that they have presented. Like I said, they started in 2006, but this only goes back to 2017. They have developed not only their big heavy-duty coolers, but they have soft side coolers which seem to be really popular with hikers and campers. I haven't seen those particular coolers, so I'm not exactly sure how they work. But you can look down the list. They've also developed other things such as buckets and chairs and other things that you could use when you're out in hunting or fishing or that type of thing. Next slide.
They've got a dog bed.
Yes, they do have a dog bed.
Nice.
Which I thought was really strange. They must have a dog. So this is their evolution of their insulated cup holders. You can see they started off with just a few colors, and they've certainly added, and they've added all different types of drinkware that you can use. Next slide. They started off mostly doing wholesale. That's how they got their start. And as you can see on the side, they have quite a few national accounts that they are affiliated with. These are independent accounts, and they deal across the deal in boating or building supply, camping, fishing, any that type of outdoor activity. Next slide. Their direct-to-customer accounts have really grown. As you can see from the bottom left, these are all corporate sales that they're involved with, that they do their emblems on YETI, and you can see there's quite a few names that you would recognize. Their retail space has really grown over the years. They're in 23 different cities. Their flagship store is in Austin. I believe on here there's 2 or 3 just in Houston. So they're really popular here. Next slide. They also have developed partners across different outdoor activities. These are organizations that they can put their emblems on YETI. They have really gone after this and been quite successful. I tried to put a different array of types of partners that they have. I know I have a nephew that's really involved with Ducks Unlimited. I was really kind of surprised with the Texas Park and Wildlife. Next slide. They do really extensive media coverage. They are really trying to grow their social media presence. As you can see, they're the 4th one down in this category. and they also are really good in advertising in print media. They have done a really good job to get the word out about their company. Next slide. Their global supply chain, I was really happy with to see, considering the issues with China and supplies. They do not have any distribution facilities in China. They do have it in Asia, but they do not have any in China, which I think for them is a good thing considering what's going on. Their distribution centers are pretty much close to wherever their customers are, which is really helpful. Next slide. This is what their recent highlights are, what they're trying to do. They're really trying to expand their base, and one of the things that we talked about is they're really good with licensing. They're going after right now a skating world, surfing world, and culinary, and it's really interesting. One of their partners is the James Beard Foundation, which I thought was interesting. They have custom drinkware with college football programs, and the recent one is LSU. They're continuing to launch new products. They're also trying to accelerate their direct-to-customer sales, which has been quite successful. And they have quite a expansion that they can do internationally. Their international sales grew 30% in the third quarter of 2024. Next slide. As you can see, they started out doing mostly wholesale. And as late as 2015, that was where most of their sales come from. But it has changed since 2015. As you can see, their direct-to-customer sale is taking over the wholesale aspect, and they're hoping to continue that and also continue with the international sales. Next slide. As you can see, they have expanded. If you take a look across the bottom graph, how much their international sales has grown, which is a significant amount in a short amount of time. Next slide. This is a breakdown of their third quarter of 2024 and what their products, how much they sell, and how much you can sell on the right, how much their sales growth has grown overall in each category. Even though their direct customer has grown more so than the wholesale, you can see their wholesale has grown by 14%. Next slide. This is the adjusted third quarter results. You can see the adjusted net sales, I believe, has gone up 10%. And then they give you by coolers and drinkware. I believe the coolers is 12% and the drinkware is 9%. So they are continuing to grow. A lot of people think that, well, they've got a lot of competition in with other companies, but they are still continuing to grow. It is hard to do competitors for YETI because a lot of them are privately owned. We have two of their competitors that are privately owned here in Houston. One is called Arctic, and the other one I think would be more familiar would be Igloo. But you can't really get anything from them because they are privately owned. Next slide. And as you all know, this is my favorite thing to find. And this kind of sold it for me when I didn't want to do YETI. It is a triple play. This value line just came out a couple of weeks ago, and it was also a triple play in the last value line that came out in October. So we see we have great double-digit potential gains. The 18-month point is $61, and this was $37.72. Today it closed at $37.65. So we're still within the range of those double digits. We have a great PE expansion from 13.4 to 16, and our net profit margin is remains steady. So I was very pleased to see this. Next slide. This gives you some things I wanted to point out from the paragraphs below the top graphs. They have had a represent 11% advance in 2023, which is really good. They're forecasting an earnings increase of 18%. The international sales is, they feel like will continue to grow, and the outlook for 27-29 remains sound. And these shares, which we all are supposed to be, is suited for buy and hold accounts. Next slide. This is manifest predictions for YETI. Obviously very good quality, par of 17.9 with a proof of 18.1, which is really, really good. And their projected average price is 85.43, which we're at 37.57 on this one. Next slide. I see Bakul is in the audience. I got this from him at the Bink, I believe it was 2 years ago, and I made this graph, and I'm thankful for him because this is really helpful for me. I gave you 3 years of their numbers, and on the 9/30/24, they meet all the criteria except for number 3, which, you know, I would be happier if they met all of them, but they don't meet number 3. So Baku may tell me differently, but I'm going to ignore that one. So this one works for me because they meet 9 of the 10 criteria across the board. Next slide. Okay, this is my SSG. It's a little crowded, but I will go through it. Their initial IPO was in 2018. And although their earnings and profit have been a little jumpy, they are continually, they do overall have a upward motion. I put in the first, let me do my, I did a really big mouse so you can see. I put in, these are the Morningstar predictions. This one is value line, which you see is 2,600 and 4.75. I'm not sure why this one jumps up so much out of line. This is the member sentiment sales, which is 2774. And then this is my predictions at 10%. So I'm in line pretty much with what everyone is predicting. And their sales last deal was 10.4. So I was confident between member sentiment and manifest to put my forecast at 10% on both accounts. Next slide. I would like for their pre-tax profits to be a little bit more. Obviously, their return on equity is quite good. The 2023 was 26.4, and they have definitely made improvements in their debt to capital, has gone down dramatically, and I'm really excited about that. Next slide. The PEs have been quite high, but as you can see from the 5-year average, they are going down. The current PE is 16.1, and Morningstar has a fair value of 44.77, which is, you know, a good bit above the current price. Next slide. I do not like to put the average height PE over 30 or 35 because I think it's being unrealistic. So I put it at 30. If you'll see in the member sentiment, high PE is 27. Their high price is 94.2 with a low PE of 15 and low price of 30. My low price is 30.1, which were the same. And my low price is 80% of the current price. The average PE for Manifest is 15. And if I could do it in my head really quick, mine's probably a little bit higher, but we're within the same range. So my buy price comes in kind of not middle, but close to middle of the buy zone. As you see, member sentiment, their PARB is at 19.7, Manifest is 17.9. My average is 16.4, so I'm in their range. And I believe that this would be a good buy from everything that I can see. So I hope you consider my stock for a selection.
Ann, thanks a lot. We have two quick questions. Would you consider this a large company?
No, I wouldn't.
What size would you consider it, Ann?
Okay, well, hang on a second, and I'll tell you.
All right. And while you're doing that, the other question is, do you own this stock right now?
No, I do not, because I did this right before I went on vacation, and
Okay.
I have not had a chance to buy it yet. But it is definitely on a consideration to buy it, and I would say this is a medium-sized company.
Okay, thanks a lot. And there are a couple of questions in the questions log that maybe in the next couple minutes you could take a look at and maybe answer a few of them, okay?
Okay.
Ken, I would also point out that it is in our best small companies list for this year. And the picture on your screen right now, everybody, is while those of us back home were shoveling snow, this was Ann's view. This is what Ann was doing.
Yeah, I miss the snow in Houston, but you know, you have to do what you have to do.
All right, moving on.
That's Hawaii.
I'm going to talk tonight about Fortinet, and I did a lot of research on Fortinet, and I happen to own the stock in two different portfolios, and I got the idea that Fortinet sometimes feels that it's overlooked. It happens to be one of the largest companies in the cybersecurity space, but I think that it doesn't feel it's maybe as sexy as some of the smaller startups that don't make any profit, and so it does a lot of talking about things on its website. It's a very, very, very comprehensive investor presentation. And if you're interested in Fortinet, I would take the opportunity to read it and try to understand some of the vocabulary involved, because what the company does, besides saying cybersecurity, can get a little bit involved. Here's what I was looking for. Next slide, Mark. Here's what I was looking for tonight to present to you. I wanted a company that was up straight and parallel for the past 4 or 5 years. I've kind of gotten over my fascination with companies without any earnings. I wanted an estimated future sales growth around 12% or better annualized. In other words, I want it to be growing so that it would help add to our sales growth in the total portfolio. I was looking for a newcomer to the roundtable, one that we had never spoken of before. I wanted earnings predictability above 80%. I wanted a good, solid, predictable set of earnings to take a look at it. I wanted at least average financial strength, and I'd like a quality rating at 80 or better. And trying to put all those things together and looking in some of the portfolios that I own, I found Fortinet, and that's a cybersecurity vendor. Next slide, Mark. They are unmatched when it comes to traditional cybersecurity, and most of you know that as firewall security. That's one of their major businesses, and you can see the competitors that Fortinet has chosen to compare itself to are Checkpoint Software. That's the pink line, and that's an Israeli company. and Palo Alto Networks, which is a California company. And you can see that Fortinet certainly is the leader when it comes to unit shipped, product revenue, and the most customers for their firewall. They don't get credit for being this large, but they are the largest player in the cybersecurity space. Next slide. Another one of their pillars, they call them, in their business. They divide the business into 3 pillars, and the other pillar is a mouthful. It's ASIC powered SD-WAN. Okay, and ASIC stands for application specific integrated circuits. What that means is that they have actual electronic circuits devoted to specific applications. They're not relying on generalized circuits to be modified to do other tasks that they maybe weren't designed for, or to do multiple tasks. They're working on specific circuits for specific different types of procedures. SD-WAN, WAN is a wide area network, and SD is a software-defined wide area network. So you create this wide area network. It could be over a few cities or a few states or a few countries. It could be across the entire world, the wide area network, and then you define what it does by software. Our Gartner execution grade, Gartner is a company that does quality testing in all kinds of areas for all kinds of companies. And the highest execution grade for these ASIC powered SD-WANs goes to Fortinet. And you can see it circle way up there at the top right in that left-hand block there. They have the most customers of anybody in the world, and they've been nice, healthy growth since this particular pillar started, and it only started a little bit more than 4 years ago, and it's powered by an integrated portfolio called FortiOS. And the OS is the operating system, but they call it FortiOS. I don't know why they put it all together, but they did. And that fuses this software-defined WAN with this idea of this ASIC, or the application-specific integrated circuits. It's a brand new way to provide security, and Fortinet is the leader in that at the present time. Next slide. And their last pillar, their third pillar, talks about operational technology security. And again, I'm looking at a company that provides evaluation of these different types of programs. This is Westland's Advisory, and they say that Fortinet is the leader by far of all the companies that provide operational technology security. What that basically means is that they will deal with any outside threats that are attacking a network or a wide area network. You can see Fortinet's growth, that's the blue bars on the graph, and you can see the growth in the market on the green graph line, and Fortinet is growing its business faster than the market is growing, which means it's taking a share from other competitors in the same space. That's their third pillar in their business model. Next slide. They outshine anybody else in the world. Here's some of their competitors: Palo Alto Networks, Zscaler, Checkpoint, CrowdStrike, and Fortinet has more patents than all the rest of them combined. Those patents are across their three pillars. The red on the right is the securing the network, the firewalls. The light blue is the security operations. That was the third pillar. And the darker blue is that SASE again, and that stands for Secure Access Service Edges. This is a new way of them providing network security. Instead of a centralized system of security, imagine that instead of having a single police station where all the police were concentrated in the middle of the city, that you took and you ringed the city with 15 or 20 different police stations, each one of them having officers that could spread out from their smaller station. That's the kind of visual you might use to think of this single access, or secure access service edge, where the policing, the security, has moved out to the edges of the network that are usually left unprotected, and Fortinet is moving its software out to those edges and beginning to protect those edges of the network itself. Next slide. They're the most integrated operating system that exists. These three pillars hold up their particular set of products, their particular set of services, and the 40OS, the 40OS operating system has a large number of individual components. Here you're seeing awards granted again by Gartner. You're seeing awards for Fortinet, and in most cases, Fortinet is standing either first in the subcategory or second in the subcategory. Next slide. It's purpose-built, proprietary, and here's that ASIC again, application-specific integrated circuits. And you can see that their most recent release has 14 different applications that people can use to create this ASIC security system. The number of applications is twice that of the previous generation, which was labeled SP4. That's the one with 7 apps. They've now moved to 14 applications, and again, being very specific with integrated circuits to deal with each of these potential kinds of problems. Next slide. They're dealing with mainly these wide area networks that are all in the cloud. And of course, you have graphics of little gray clouds up there. And if you really take some time to investigate this graphic, you'll begin to understand how all of these different things that I've been talking about kind of play with each other as a team, and how Fortinet ends up being able to provide security in a very high level for any company that purchases its systems. Next slide. Here's those 3 pillars again. Secure networking, which is growing faster than the market. The unified SASE, the Secure Access Service Edge, which is growing faster than the market. And the AI-driven security operations, which is dealing with outside threats, and it's growing faster than the market. Well, in order to grow faster than the market, you have to be taking share from your competitors. Next slide. There's the visual analysis. Remember, I was looking for up, straight, and parallel for at least the last 5 years. I'm showing you 6, almost 7 years of up, straight, and parallel. I've captured the value line annual rates. Value line suggests revenues might grow 15.5% for the next 3 to 5 years, and earnings might grow 18% for the next 3 to 5 years. I circled the Morningstar numbers that come with the SSG Plus. Morningstar is suggesting sales might grow around 12% for the next 2 years, and earnings might grow at almost 23.5% for the next 5 years. That's a 5-year call for earnings right there. Those numbers will come back in just a moment. Kind of internalize them if you possibly can. Next slide. I am using the numbers and leaning heavily on Value Line and Morningstar, and I've decided that 15% sales growth and 18% earnings growth are doable for this particular company. I've captured the PE values from the last 5 years. Notice that the PE values on average have been fairly high, but the average PE for this pretty fast growing company has been at around 47, and the current PE is around 49. I think the company is relatively fairly valued, and I think there is room for PE expansion from that 49 just based on the high PE column that I'm taking a look at. Next slide. Value Line suggests that the average PE for the company will be around 45 moving forward. That's a slight decrease from where the average PE has been for the last 5 years. And I'm choosing a high of 47 going forward and a low of 31 going forward, which gives me an average of 39. That's under Value Line's 45. So if Value Line is correct, I'm going to see some PE expansion for this company on the SSG that I'm looking at. Next slide. This SSG with that reduced PE value gives me a buy. 3.3 to 1 upside downside, projected par value of about 13, total value of about 17. Value Line suggests that the company might do 4 to 14. My 13 par falls in that range, makes me feel pretty good about the company, and I'm going to add $1,000 in Fortinet to the roundtable portfolio.
Cool. Thanks, Ken. Quick reminder that we get together and talk about things like this Tuesdays at 2. With that, and we're 2 months and a day from the start of baseball season, let's talk Taiwan Semiconductor.
All right, and unlike the previous slide, there is no bull here. You can see Taiwan Semiconductor, a nice solid growth record and quite solid consistency. I think probably most of us know at least something about the company, and I have presented it a couple of times previously to the roundtable. So let's take a look at a little bit of reminder and maybe a few updates. First of all, where did I get the company? I just took the roundtable portfolio, and after the disastrous day yesterday, I had been leaning toward a couple of other potential companies, one in the portfolio, one out, but I ranked by par, and there you have Taiwan Semi jumped up, and notice it has performed quite well, a little over $6,300 even after the 12% or so price drop yesterday on 3 picks. And notice it happens to be right in line there with YETI that you heard about earlier from Ann. Next slide. Did a quick industry study and ranked by quality. And you actually, I chose to cut the slide off at Marvel, but you can go down all of the excellent companies, and none of them have a par in the green. So again, quality semiconductor companies are certainly fairly priced, if not possibly overpriced. So again, Taiwan Semi jumps to the forefront, and notice the very solid financial strength and earnings stability, and also the 12.9% projected growth rate here that will help boost the growth rate, as you heard earlier today. Next slide. Here's what Taiwan Semi does. They started the idea of a dedicated chip foundry. What that means is they manufacture semiconductor chips and related products. They don't design them. When Taiwan Semi started 30 years or so ago, they were the first company that only took contract work, and now they are the largest, and that's really the trend. Most semiconductor, both developers and users, like NVIDIA, like Apple, and so forth, no longer manufacture their own chips. They contract out to other companies, and Taiwan is frequently the one that they go to. As you can see, since 2000, they've had over 50% market share, according to Morningstar, and Morningstar also says that their profits, gross and operating, have over doubled their peers for years. And Morningstar gives Taiwan Semi a wide moat. Most of their factories are in Taiwan, however, their customers are worldwide. Next slide. You can see they have all sorts of a full range of chips that they manufacture. Most of their customers are non-manufacturing microchip designers. You see 3 listed there. I already had mentioned 2. Not sure that NVIDIA has ever manufactured chips. AMD was a manufacturer for a long time and gave that up and go with Taiwan Semi. And again, there's a shift to the fabless business model, and that certainly supports Taiwan Semiconductor. And as we'll see in the next couple slides, they're the technology leader as chips tend to get smaller and smaller and more powerful. Next slide. Here's their current fourth quarter, most recent quarter reported for fiscal 2024. Revenue by technology. Take a look at the red and green parts of the very Christmassy pie chart. You see what roughly 60% in the 3 nanometer and 5 nanometer, the 2 smallest areas, or major smallest. The latest are actually 2 now, but it doesn't appear strong in the pie chart. And then you could see over the last couple of years, fiscal years 3 actually, how the 3 and 5 nanometer chips have grown. But let's look at a couple of years ago, which I think was the last time I presented Taiwan Semi. Next slide. You don't even see the 3 nanometer on here, and now it's over a third of the business, and the 7 slipped to a much smaller share. Again, they are the leader in technology. Next slide. Here's what the company says their major distinctive and business model driver is what they call Trinity of Strengths. They're the technology leader that we kind of touched on. They have manufacturing excellence, over 12,000 different designs that they do. And the third of the Trinity is consumer trust. They have almost 12,000 specific products that they produce for their consumers. And what they mean by trust is that they do not compete with their customers, unlike a designer that also fabricates chips. The manufacturer may have a product that competes with the customer. Since Taiwan Semi does not design chips, they don't compete with any of their customers. And I'll also just mention here on the fabless model, or in this case, the foundry only model that Taiwan Semiconductor is, since they produce chips for virtually everyone, and they are the supplier manufacturer for many microchip producers or designers or sellers or even end product users, they are less competition prone. If NVIDIA chips prevail, they will be manufacturing NVIDIA. If Broadcom chips prevail, they're manufacturing for Broadcom. If AI suddenly falls out of place, they've got other avenues that they are producing for. So they are removed from that cutting edge, who's going to prevail, because they sell to everyone, or in this case, manufacture for most of the major players. Next slide. Here's their revenue by platform or by use. Notice a lot of their manufacturing, and in fact, until fairly recently, the last few years, smartphone was the biggest share, but now HPC, or high performance computing, is their primary platform. And also you could see their growth rate grew 60% almost in the last year, but smartphones are still growing very well, as you can see as well. And the HPC, or high performance computing market, is expected to grow by 15% worldwide. Next slide. And that's 15% in 2025, the next year. So here are my judgments. I chose to use 15% as my 5-year sales growth projection. That's a little above the manifest consensus and a little above value line, but it's a little below or right in line with Morningstar and some other analysts. And I'll go ahead and just mention that analysts universally see, because of the market share and the technological advantage, are extremely optimistic on Taiwan Semi. Most of them, even before the major price crash yesterday, where Taiwan Semi fell 12%, although it did recover 5% today. And by the way, I'm using today's price. So it's the current price. It was even better yesterday, but still good and solid today. Projecting pre-tax profit to stay about the same as the average. Again, it's been growing a little bit. So if it continues to expand, that could be a pleasant surprise. And that leads me to projected earnings 5 years out of $13.68. Next slide. And that leads to a bottom line using a 30 high PE of 17.7% at the average PE of 22. You get still a decent 11.1 percent, and that's compared to the manifest par, which again is based on an average PE projection of 15.4%. So it's I'm a little bit under manifest consensus on the bottom line. They use a slightly lower growth rate, 12.9% if I recall, compared to my 15, and a slightly higher profitability. So that's just the way that those shake out. But again, as I mentioned, most of the long-term analysts I look at, Morningstar has it at 4 stars, Sephora has it at 4 stars, and Sephora, by the way, I think was at a $220 price. I think the closing today was 202, which is what both the manifest and mine were projected. And Morningstar, even after the news yesterday of the Chinese competition from DeepSeek that's going to just blow all of the AI world out, Morningstar says that in their judgment, the fair value price on which their 4-star rating is based is solid. So I'm going to add an additional $1,000 to Taiwan Semiconductor.
Cool. Thank you, Cy.
Cy, we have a question in the audience, and I'm going to unmute D. Finn and let him or her ask the question. I can't unmute you, Ms. or Mr. Finn, because you're self-muted. So if you unmute yourself,
Hi.
you'll be able to speak. Hello, how are you?
Hi, good. How are you guys doing?
Pretty good.
Good, good. Hey, do you know that Corky and Lenny's closed in Woodmere?
Okay, do you have a question for Cy?
Oh, yes, yes, yes. The question is, would you consider Taiwan Semi as a suitable candidate for a core holding in a portfolio?
Generally, I would say yes. I mean, you know, to some extent, a core holding could be in the eyes of the beholder, but it's a large company with a very solid track record, and about the only possible equivocation that I would have, and why I say a little bit of suitability, is the geopolitical risk of it being in Taiwan, and you know, we know that has been an arguably unstable part of the world. But outside of that, would have no qualms calling it a core portfolio or a core holding, and in my view, it still would be core.
Cy, I have 2 quick questions. One of them from Kate. She wants to know, did she hear rumors about Taiwan Semi going to open a plant in the U.S.?
I should have run that down, but and I'll be glad to and confirm it for you. But I do believe that Taiwan Semi, in response to the CHIPS Act, is planning, and I believe maybe already under manufacturing, a plant in the U.S.
Okay, and then Bill Thompson would like to know, Cy, do you own this stock?
Not at the present. I drew myself after yesterday's price drop because I had looked at it about 3 weeks ago, and I said, shoot, I missed my chance. I'd been watching it, and it had risen up. And then after yesterday's fall, I wrote myself a note to get back on my broker and buy some. And unfortunately, I got too busy. But I'll probably have some in my portfolio because it's still, even today, a solid price. But no, I don't own it right now.
And then I don't know if I'm going to regret this or not, but we have a question from Kevin in the audience, and I'm going to unmute Kevin. Kevin, you'll have to unmute yourself to go ahead and ask your question. Go on.
It's just dealing with the stuff where Taiwan is also building other facilities. Cy, you're right. It is because of the CHIP Act. They are building a big, huge plant. I think 2, in fact, in and around the Phoenix area. One of the concerns, though, that they have, Taiwan does, they've talked about this in some stories, is that the cost of doing business out of an American plant versus a Taiwan plant is significantly higher. Part of it is because the work ethic in Taiwan is to work until you basically drop. And tech people in America will sit there and say, look, I'm making good money, and if you make me work all this time, I'm going to go somewhere else. So it's sort of adjusting to the culture of America versus the Taiwanese culture. But yes, they are building out other places as a protection against whatever does happen with China to Taiwan. That's it.
Right. All right. Thank you. And that's I didn't hear a real question. I think you made a good summary statement for both the pros and the cons of local manufacturing or domestic manufacturing.
Thanks a lot, Kevin. And Cy, thank you very much. We're ready for our next presentation, Mark, and I think it's you.
Okay. I was just going to sneak in our reminder that we do archive all of these sessions, including our bull sessions and roundtables, on YouTube. If you simply go there and search for Manifest Investing or Roundtable or Bull Sessions, you'll find the page. If you can't find it, let either Ken or I know, and we'll address the situation. We did have a heck of a good session this afternoon, and it's already up. If you want to take a look at that, we talked a bit about the AI. We talked a little bit about the Chinese deep thing, but not too much. Decent session, had a lot of fun. Go ahead and take a look at it. Part of that session was to talk a little bit about, we have paid some attention to Seeking Alpha and their annual top 10s that they come out with every year, very early in the calendar year, and a pretty terrific track record. The gentleman shown on the screen is directly responsible for the most recent 2 years. It was unclear how much influence he had prior to that, but that actually averages out to about a 70% rate of return for those 5 years, and that's something worth at least paying some attention to. And we have basically tracked what they're doing, and we're looking at how much emphasis they put on this concept of momentum, and we're basically exploring that. There are his 10 selections on the right hand side for the calendar year coming, and a pretty good start out of the gate. Some of those companies would probably not capture our attention real easily. Others are right in our strike zone, for sure. As a result of that work, we actually have put together a relative momentum indicator at Manifest. And I just ran a really quick check. We think more of this in terms of best of both worlds situation. Companies with high return forecasts, excellent quality, and possibly with a dash of momentum. And you can see some of the companies on here that we have talked about regularly or featured. Taiwan Semi makes the list. Green Brick Partners is a kind of a common favorite. Argan was on the Seeking Alpha list. Construction Partners has been in the Roundtable portfolio in the past. So again, we kind of see this as an opportunity to see if that factor is worth paying some attention to. The question came up this afternoon about, well, how would you think about these, relatively strong momentum stocks? And the way I would characterize it is they're basically two situations where this momentum is going to kick in. The first rhymes with Hugh McManus and Hugh's obsession with finding vetted, high-quality companies that are trading near their 52-week lows. Perhaps with a low relative strength if you're into that type of technical stuff, but companies that have kind of bottomed, have been beaten up, but are well positioned going forward. The opposite side of that is companies that have been on a heck of a persistent run, like a United Rentals, for example. So you're basically looking for one of those two flavors of opportunity to check it out. And again, this is considered a beta. We're trying to figure out whether or not it makes sense. We find it really hard to ignore this. And just wonder, we're scratching our heads. Could mean nothing, but we're trying to figure it out. Here's a little bit of an expanded list, just to give you a feel for some of the companies that would fit that description of high return forecast, pretty strong return forecast, some of them a little bit less strong towards the bottom down there, and mostly excellent quality ratings. All of the relative momentums are close to 90 or above, And then you can see the opinions on the right from Value Line, Morningstar, the analyst consensus, and then we have been tracking year-over-year sales expectations in the far right-hand column. I get a little bit skittish when those numbers approach zero or go negative, because that's almost like a recession within the company you're studying. It's kind of the way I think of it, but a pretty strong list of companies. We featured Mueller last month, and many of the other companies on here have come up in recent discussions. With all of the turmoil going on, Technoglass actually made this list for a while and was very tempting this morning. One of the other things I find kind of interesting about the list generated following kind of a form of the Seeking Alpha strategy described here is check out the numbers in the Morningstar column. They basically think that most of these companies are overvalued. And then notice the relatively low numbers in the Value Line category. So it's just not kind of their cup of tea, so to speak. On the flip side, you can find some fairly enthusiastic rhinos or institutional analysts in here. And so as I go looking for a company here, I really like the notion of Argan in terms of it's an engineering and construction company that is building places like LNG facilities and data centers. So that one has been really hot in terms of theme. United Rentals came up with a couple other rental type companies in some recent discussions. Fourth one on the list is the one that kind of attracts my attention, though. Decent return forecast, excellent quality, qualifies here. It's okay in both of these perspectives, and a fairly decent year over year. So let's talk about OPRA. I'd never heard of them. Maybe we pronounce that ticker symbol OPRA. Do we dare do that? Anyhow, that could be a good sign also. Who are these guys? Well, it turns out that they are basically a mini Google in the rest of the world. And it's basically known here in the United States principally, and some of the people on the call will recognize this, gamers. Gamers use this as their browser of choice because they do some stuff specific to the gaming world. That's not my world, but that's kind of what they focus in on. They've been around for, well-established company going all the way back to 1994. And you can see, again, very much like a mini Google that many of us have never heard of. So what are some of the highlights? We're talking about a company that has decent growth characteristics, 20% annual growth, as shown here. And interestingly enough, they basically have the population of the United States as their monthly active users. Think about that. And for a company that many of us have not ever. Ken, had you ever heard of this company?
Never, Mark. Never.
Okay, I'm just checking between the two of us. So we're 0 for 2. Anyhow, it's that Google model, and again, take it from me. I'm the guy who stood there on the stage at the National Convention in 1998 and admitted that I didn't know how Google was ever going to make any money. So very similar business model, advertising and search, and a strong presence outside the United States. So pretty good looking company, and these results are brought to you by one of the companies we talked about at the bull session today, Perplexity, another browser/search engine. So here's some of the focus. This is what they say.
I will say, Mark, I don't think I've ever studied a Norwegian company before, however. Okay.
Hey, we go to the fjords if we have to for
Right.
opportunity. So they say we are OPRA. This is a software company that does some pretty cool stuff. And again, like we said, they are obviously very focused on gamers. Even the screen looks like a gamer screen to me. If you go into your local Best Buy, that little corner of computers off on the side, that's what this looks like. So they definitely are appealing to that. I did check in with the number one gamer in our family and discovered that, yes, he is quite aware of OPRA. So our son actually uses that as one of his active browsers. So there you go. So again, to reinforce, many of us in the United States are not familiar with the company unless you're a hardcore gamer. The brand awareness is fairly low on here, as you can see on the left-hand side, but more aware in some of the areas of the planet. So not so much a stranger there. Here's a quick look along with a little bit more of company description there, but here's a look at the key characteristics. Sales and earnings, and the stock price has been kind of in a channel, bumped up in 2023 and was kind of relaxed back a little bit. There was definitely a COVID disruption. I did not dig in and figure out exactly what happened here. I suspect they did some kitchen sink write-offs here, and the earnings disappeared from the planet for a while. But you're basically looking at a company that does have 500 million in sales, growing somewhere in the mid-teens, with a PE ratio of a very modest 10. So you basically end up with a projected return forecast in the mid to upper teens. Very high quality company. It's fairly stable, very good financial strength. Absent that bump in 2021, it would be a much higher earnings per share stability, but still not too bad. And it checks out pretty good in terms of the projected return on value, which of course incorporates the entire capital structure into the return forecast calculation. Here's a look at where the company has been over the last year, and you can see it's been turbulent and generally down over the last couple of months. So that makes it a little bit attractive. If that price does turn and head north, you will get that style of momentum there. And then the quote at the bottom, I actually asked one of the AI engines to prepare an analysis of last week on Wall Street in the voice of Louis Rukeyser. And I admit I'm showing my age here, but this is the actual generated text on last week on Wall Street. And if you can read that without reading it in his voice, I tip my hat to you. And I like the fact that he, maybe it's a sign, Ken, he mentions OPRA, which is right here. I think it's a sign.
You're
if you're out
stretching
there,
now,
I'm
okay?
stretching. Well, I read this in his voice, and I think it's an interesting company, and I just love the way this quote ends. It's a nice quote. All right, that's all I got, Ken. So OPRA, think OPRA or OPRA if you want to go that route, and let's go ahead and give it a try.
Okay, give me a chance to get a poll going here. Oops, wrong one. There we go, and let's launch the poll. And we're asking you to vote on which company you think should add another $1,000 to the portfolio. We're already adding 1,000 for each of the 4 presentations, and we'll add an extra 1,000 for the audience favorite. We'd love to get 85, 90% of the audience voting. We have a nice audience this evening, and we're up to we're over 70% now. So let's give it another few seconds. Let's see if you can push it to 85, folks. Okay, we just need your vote. Doesn't cost anything. You can only vote once. There's 85. Can we push it to 90? I'm going to count to 10 backwards here, and then I'm going to display the results. We got a few more votes coming in, and I'm going to close the poll. We got up to 86% voting, and I'm closing the poll, and I'll share the results. And tonight we had a clear winner. We're going to put Fortinet in the portfolio a second time, the cybersecurity. So it goes from never being in the portfolio to now having 2 positions. Good solid 3-way tie for next in line there, OPRA, Taiwan Semi, and YETI. So
I just want to say I'm stunned, and I hope it's not people out there feeling sorry for me after seeing my shoe last week. Bull sessions, but those are some interesting results. And I will say that I'm a YETI shareholder, and I had no idea of all the stuff that they're doing. So I want to thank Ann Manning for helping me out here tonight.
Well,
Wow.
I want to thank Ann, and I want to thank Cy, and I want to thank you, Mark, for the work that you put in around the year and at every one of these roundtables. Our February roundtable will be on the normal last Tuesday of the month. That'll occur on February 25th. Mid-Michigan is going to do some discovering of
I didn't have a
different
title.
things. Well, I don't have a title yet either, so but we're going to be discovering some things for beginners on March 1st. There'll be a series of 3 classes on March 1st, and if you're on our guest list, we will tell you about them. Mark's going to attend an AAII meeting in Charlotte, North Carolina on March 8th. The March Roundtable will be on the 25th, again, the last Tuesday. And sometime in April or May, we'll be visiting southeastern Michigan and doing a program in southeastern Michigan. Keep an eye on this space, and we'll let you know where we're going to be and when we're going to be there. Thank you, audience. We had a really, really nice audience this evening. It's not too often that we move into the 200s for our a winter roundtable. So we'll thank you again for coming, and we hope we see you next month. And again, Ann, thank you so much for the work you do in putting that presentation together. Cy, as always, great presentation, great stock. I even have a note on Taiwan Semi for a possibility for my groundhog portfolio there, Cy. And Mark, I'm not going to put OPRA in mine, so you can take it for yours, okay?
Yeah, I'm surprised, Mark. I had never heard of the company, but I thought that OPRA kind of made the rounds some in the early BI web days. I've used OPRA for years, and I thought I kind of discovered it through Better Investing.
Now that you say that, because I was handling both Apple and PC based stuff for the magazine, and I know that I ran into OPRA back then also.
Yeah, but I didn't know about the company until tonight. So
I'm getting a few of you wanting to know where you can get copies of the slides and the presentation. And again, we're on the YouTube. Boy, do I sound old, huh? We're on YouTube. Just Google us under Roundtable or Manifest Investing Roundtable or Better Investing Roundtable. You'll find all of our presentations for the last almost 15 years. And if you want just the slides, you can get them by emailing Mark at markr@manifestinvesting.com, and he'll send you a PDF of the slides to take a look at. But the whole presentation with the dialogue and everything is on YouTube, and it'll be there within the next 24 or 36 hours. So without any further ado, thank you all for coming. We hope you had a good time, and we hope we see most of you next month at the last Tuesday of the month, 8 o'clock Eastern Time. Good night, everybody.
good night.
Good night.
Right.
Thanks, guys.
Thanks. Yes.